Right now, we want to turn to the broader markets, and for that, we bring in Marianne Bartels. She is Chief Investment Strategist at Sanctuary Wealth. And Marianne, we have seen the markets run pretty hot. A lot of people starting to wonder if it's time for a pullback. But I think you're looking at things and thinking, look, this makes sense based on what you're reading, correct?
Yes. Good morning, Becky, and thanks for having me. You know, the market, Becky, had traded in a range for almost a year. And we had a break out of that range either to the upside or the downside. And we made the argument we were going to break to the upside just because of positioning. Positioning was so bearish that we thought we'd break to the upside. You have to remember, markets don't peak on pessimism. They peak on optimism. And now what we're also starting to get is earnings estimate revisions are starting to get revised to the upside. Second quarter numbers still look negative. But looking out to third and fourth quarter, the numbers are getting positive. The market does not trade on the economy. It trades on earnings. So this market has legs. Yes, it's extremely overbought. We can get a pullback, but I still think this year is going to wind up being a very good year for investors.
You know, you look at things like FedEx and the warning that it issued last night just for its earnings for the rest of the year. Normally, you would look at that and think this is going to be bad news for the economy overall because FedEx, as one of the transportation issues that you face, really can be a signal for the economy. Is this different because FedEx was dealing with, the change in consumer behavior after the pandemic? It's really hard to read these things at this point.
No, Becky, you're spot on. Yes, FedEx does have an issue. What's keeping this economy going is the consumer. And we all know that. And it's really the services side. And I know there's a lot of concern that, savings is coming down and we're starting to see debt. But that can continue. We're not at any extreme levels. We're not at negative savings. We don't have extreme debt, which means the consumer can still save. I don't know about you, Becky, but when I go out to dinner, every restaurant is packed.
Yeah.
Many people going on vacation. So there's still money moving in this economy.
I guess if that's the case, if the consumer is still hanging in and still keeping the economy strong, do you think that the Fed is going to do even more? Additional rate hikes or keeping rates stubbornly high for an incredibly long time? That's the weird balancing act.
I do agree that they want to keep rates as high as long as they can and as high as they possibly can. And we're going to have to wait to see. Obviously, they signaled that we could possibly get 2 more rate hikes, but that did not derail the markets. And I think the reason why that did not derail the markets is the markets are looking forward and they're seeing that earnings are beginning to improve as a whole. And as you know, tech has been on a tear. This whole AI theme is really playing out. And I think the market is really more focused on the longer term than the very near term.